Hello investors, stock market crash is continuing. We can see the S&P 500 is continue to fall. We have on the chart declining channel, and now as its target, as I see, it's the lowest, it's the bottom of this channel. Also on the chart we can see a support level is 3060. As the correction continuing, most probably I can see that the target is to trade above this support level. The Nasdaq also now is under pressure today. Its RSI, the momentum indicator, is about 30, and today the futures on Nasdaq Index is down about 3%. So most probably we will fall a little bit lower, and I think that there is a high probability that we will trade lower another 5%. The average ratio of S&P 500 stocks is about 20, so as for me it's not so expensive now. I think it's not bad point and time to starting acquire some individual stocks, start to buying stocks. So as for me, I think it's a good level. We can see that Google P ratio now it's about 20. If we're looking at chart like this, yeah, it's a weekly chart. So now it's only 20. So now we can see that its current ratio is cheaper than 1 year ago, 2 years ago. Also Netflix is the same, only 16 PE, and on the chart we can see that really it's not expensive, it's very cheap, yeah. And also Netflix, you can see its current ratio, PE ratio is only 16. It's very cheap. It's cheaper than 5 years ago, 10 years ago. Now it's trading on the levels of 2011, 2012, but for so many years Netflix of course made a lot of profit, made a lot of buybacks for its shareholders. So the reason why we have so strong correction is here. US inflation accelerating to the 40-year high, pressuring Fed and Biden. Consumer price index rose 8.6% in May annually and 1% from April. Shelter, food and gas were the biggest contributors to advance. So US inflation accelerated to a fresh 40-year high in May, a sign that price pressure are becoming entrenched in the economy. That will likely push the Federal Reserve to extend an aggressive series of interest rate hikes and add to political problems for the White House and Democrats. The consumer prices increased 8.6% from a year earlier in a broad-based advance. Here from the chart we can see that core CPI, which strips out the more volatile food and energy components, rose less than percent from the prior months and 6% from a year ago. It's also above forecast. So the inflation issues are very huge, and also the price of oil is also very high. We can see that now its current we can see that now its current price is 120. There is no sign that it's going to be a correction, unfortunately, in oil price, because oil price, fuel price is a big contributor to inflation at total. Also, let's have a look that what we can see on the US Treasury bonds. It's the 2-year yields. We can see that now its yield is higher than in 2008, 2009 when we had the dot-com bubble. So it's also very bad sign for the economy, for the inflation. More than 3% its current yield. So also the 2-year is now is higher than the 8-year. Let me see. 2-year is here, and the US 10 years bond also actually they are the same. So we can see inverted yield curve. It's also very bad, and it's it's really an issue for the Fed, for the government to solve this problem. And the DXY index, US currency index, also hits its highest levels for the last 5 years. We can see here a very nice move, more than 70%. It starts at February 21, and for 1 year we can see a very strong move. So if you like this video, subscribe on my channel, and see you on the next time. Bye.